Welcome back to my YouTube channel for the weekly US30 breakdown. Let's get it. Welcome back to another weekly analysis and forecast video. I hope you had a good week. Let's go over how we caught this 900 pip move. So just briefly, if you haven't watched last week's analysis video, click on the card above or the link is in the description as well. So last week found us closing here. This is Friday. Yeah, Friday night. I expected price, or I mentioned in the video, in last week's analysis video, that price was bouncing to this level and rejecting off this level. We were ranging here. Yeah, I expected price to bounce along, possibly get a wick up, and then close back down. I did expect price to hold this level, the 42s, as we kept rejecting off this level. The reason why I did mention that we may get the wick up and then drop back down, we did have a gap on open last week, the week before, week prior, but also because this is the daily leg that brought us down. So of course, it was very likely that price could head back up to the daily high and then just drop back down. I also did mention that at the moment we can see that price is a lot more bullish. We have a lot more bullish volume on the candles, on the bull candles, than on the bear candles. So I did mention that what you want to look for is at the moment we're having strong bulls and weak bears. What we're looking for is price to head back up. We can have strong bears and weaker bulls, and then we can see the shift in momentum, which is exactly what we got for this 900 point move that we caught, which I'll show you the FTMO numbers afterwards. So on the 1 hour time frame, what did we see? We saw this volume here, as I mentioned, stronger bulls all the way up, stronger bulls, stronger bulls, stronger bulls this whole time, and weaker bears. Then we saw this ascending channel, which I'll mark out just like this. An ascending channel, of course, is usually a sign of weakening momentum. So as long as we hold structure, though, we're still going to stay bullish. Of course, this was the last structure level that we held above. We then saw stronger bears and weaker bulls. Once I saw this, as well as break of this minor support level, I can just move this out of the way briefly. Break of this minor support level, I then saw an accumulation of candles rejecting here. I then saw a bearish engulfing candle, a bull candle that tried to come in and it couldn't close above these wick rejections. We saw another bearish engulfing candle and I sold immediately. My stops were above 42.8 to hold that level just in case we do pop back and try and collect any volume from this imbalance level here. But after that, we just dropped down. We kept rejecting, playing around, and we sold it all the way down. And my target levels were here, which was smashed. So it was a very good move. So this was a 900 point move all the way from up here to down here, down to 41 fives. Brilliant move. So let's go over this week's analysis. Since it's a new month, let's delete everything and start fresh. So what we see on the monthly, we had the bull candle, the bull month, which was November. December popped back down, didn't quite reach the lows. We reached the lows with Jan month, went back up to the, again, monthly highs. We couldn't close above, we couldn't break above. We then had February rejecting the low volume. March, you can see we've broken those lows now. Okay, so we have good bearish momentum to the downside. Now, I want you to keep in mind, whenever we have monthly ranges like so, and we have break of the lows, it's a possibility that we may have the market crash. Not just one candle, but when we have an accumulation of candles, i.e. when it's ranging. Okay, again, same thing happened here. Accumulation of candles. We then had the drop. And oh, by the way, sorry, keep in mind, this is when we've reached all-time highs. Once we've reached all-time highs and then monthly range, monthly volume starts to become bearish, it's the beginning of a market drop. Again, same thing happened here. Markets accumulated, then we had this drop down, back down to 21,000 from these all-time highs of 26s. This was an anomaly. This was COVID, I believe. Yep, February 2020. This was COVID, which happened very quickly. It was unexpected. And again, monthly accumulation from all-time highs right here, and then we had the drop. If you notice all the other times beforehand, you rarely have monthly accumulation months when we're running up. We had this one here, but we didn't get anything from it. Same thing happened here, monthly accumulation candles, and then we had the drop. This was the 2008 market crash. Same thing here, monthly accumulation candles, and the drop. So you get the idea. You can zoom out all the way and see. So what do we see now? Monthly accumulation. We're now having the start of the expected drop. So if we go down to the weekly time frame, we can confirm we're still bearish. Reason being, when you see weekly candles, let me first quickly mark out these double tops. This is the base of the weekly range. So we had this a couple of weeks ago. At the beginning of March, we broke this down. We have this range, and then we've had the break below the range. And now, as of March the 10th, we've now had the retest of that range with a wick rejection as well. So you can see we've failed to close back above into that base. We've had the wick rejection, or we had two weekly rejections. Okay, we're trading back below that base now. So these are the next expected lows. The bottom of this week, which was 9th of September. Those are the next lows that I'd be targeting. So and we've also just crossed over the 50 EMA on the weekly time frame. Also, we can confirm that we should still be bearish. Whenever we have weekly bullish volume to indicate that we're still going to be bullish, the weekly volume is always way bigger than or always bigger than or equal to the previous weekly candle. So you can see here when we turn around, bullish volume, turn around, big bullish volume, turn around, big bullish volume. Again, the reversals of the bullish volume is always high. Okay. Whereas here, you can see the bullish volume was very, very low compared to this last bearish candle, and it was just a retest. Wick rejection couldn't close above. Then last week, huge wick rejection. We tried to close above that, we couldn't maintain it. We've dropped back down again. If we go back down to the daily now, we are targeting, where did my weekly level go? So these are the next weekly lows that we're targeting, the next level. Given that we've had such bearish volume, we'll go over this in the lower time frame, but I'd expect or I'd need some sort of retracement somewhere so that we can then drop further down. You can't just enter randomly when we've got so much bear volume, so much bearish volume. So if we go down to the 4 hour now, we can start to look at the levels a bit more clearly. Where's my levels gone? Levels keep disappearing. So this is the next target level. So on the 4 hour, again we can see the daily high, the high of the leg that brought this down. We can then see the retracement. We can now have the impulse back down. So as you can see, a lot more bearish volume has come in now compared to the bullish volume we've had. We had the accumulation of the 4 hour candles, and we had the shift over from Wednesday. So I actually entered this trade on the Thursday, and we had to hold it all the way through till Friday, Friday close. So let's just quickly mark out some levels. There's this level here. As we can see, all these rejections from this level, there's 4 hour rejections from this level here. We've just slightly broken below it. However, remember that you can have one candle close below, and then the next candle can actually impulse and go all the way back up to indicate the rejection of this level. So what we're waiting for now is accumulation or a retracement. We want some sort of accumulation somewhere like this. Probably take the liquidity from the resistance side, and then we can roll over. That's when I'll be looking to execute some trades and target the lows of 4,400 levels. Or we can get a retracement. So we could have either a retracement like so. We can retest this imbalance, this weekly level, and then we can have the drop down. And then I'll be looking to execute some trades, or price could actually just keep going down, and we still need to wait for some sort of pullback or accumulation, and then we can take those sales down. So that's what I'll be looking for next week. I'm looking for some sort of consolidation or a retracement. I can then take and then ride the continuation back down. Those are my target levels, 40,400 roughly. If I just quickly scroll across, That will be my target level. Just remove this 40,400 roughly. Or should I say on Wednesday, 11th September, 1 o'clock candle, sorry, 5 o'clock candle, where volume came in, London, New York session, it pushed us back up to go bullish again. I'll be targeting those lows. So that price might be slightly different, of course, depending on your broker. So we can have what we're waiting for. We can have the drop, a base, and then a drop, or we've just had the drop, we're waiting for a retracement, probably use for liquidity, or just hold a level, a certain level, and then we can have the continuation. So this you can call it, if you use patterns, a bear flag, or a range, and then a drop. So these are the two scenarios that we're looking for. Okay, when price is dropping so harshly and there's nowhere to get in, there's no point risking, because where will you be able to put your stops? Your stops will be too large for your position. Okay, so keep that in mind. I will also be creating some videos for beginners, so please subscribe. Keep an eye. More interesting things coming along. I'm also looking to get a vlog camera so I can start doing some vlogs as well, and start doing some face recordings as well. So yeah, I hope to see you guys soon. Again, subscribe, like the videos, and share if you like the content. Also, leave some comments on anything you might want me to cover on the next analysis videos. Catch you in the week.